What is up, everybody? Tyler here from Vant Trading, back at you with another video on price action, right? So what I'm about to present to you is the strategy that our hedge fund uses in order to make money in the Forex market. And what I'm about to show you is strictly based off of price action and technical analysis, how to read candlesticks, because that's really what the name of the game is. It's all price action. So we don't use any, or I don't use any indicators on my Forex charts. I think they're all lagging indicators and I don't like them at all. Sometimes you might see me have a moving average on the chart, but that's just to kind of show the trend. I don't really use it at all to trade off of. But you know, I'm not bagging any indicators or any of that. You know, so it works really well for some people. I just don't like them personally. So what I'm about to show you is strictly technical analysis and price action based. So if you're watching this and you're a stock trader, watch it, continue watching it, because you can use the same strategy in the stock market. And you know, if you're a Forex trader, well, watch this and you can use this on any Forex pair. But what I'm going to be showing you is the pair I trade, GBP, JPY, the pound yen, and I trade off of supply and demand zones. So I have 4 different trade examples I'm going to show you, short and long, both ways, just so you can get an idea of how it works. Now I've pre-selected some of these just because they're the best example to show you how it works. Sometimes it's not as cut and dry, but you know, it just takes practice. All right, so let's kind of dive on into this. So what I first do is I start on the daily just to see if there's any important levels that's going to gravitate towards. And let me kind of show you where we're at right now. So here's the daily level. And when I get on the charts, I usually trade New York session, 5 a.m. to 8 a.m., somewhere in that range. And I'll see where we're at. And if you take a look on the daily, you have this large rejection area, right? And that tells me, okay, yes, we're heading towards the zone, but it might be a level of rejection. Then I'll go to the 4-hour and the 1-hour to see where we're at, if we're bullish, bearish. This is usually where I'll get my bias, whether I'm going to go long or short. Right, then I'll go down the 1-hour and find any important and key levels that to trade off of. Like if I notice this is a very important level, I probably would have traded off this level, long or short. If you take a look, I mean, you're looking for levels here. Well, this is obviously a really important level. It held right here. It came back down, wicked it, and continued up. Right, so this is where I find my levels to trade off of. Then I'll hop down to the 30-minute, and this is where I use my take profit and stop loss, and the 15 minutes where I manage the trade. So let's hop on back up to the 30-minute. I'm going to go back to the examples that I have starting back on October 15th. So this is the day, this is a short trade I want to show you. This day, right here on October 15th. So I usually trade from, like I said, about 5:30 a.m. to about 8:30, 9 a.m., you know, give or take, depending on what the price action is looking like. But what I first noticed is, okay, so right here, this long red bar is 6 a.m., start of 6 a.m. candle. So this is 6 to 6:30. And I'm looking at this day and noticing, okay, you obviously have this downtrend. You have somewhat of a double top on a higher time frame here, and it's, you know, it's rejecting and it's moving back down. And the first thing I notice is, okay, if we're moving down and we broke this level right here, this is the, you know, it's almost like an M pattern. This is the this is where you really want to take that short. You know, if I notice that we're breaking it down here, we're most likely going to come down to its low of yesterday and fulfill this double top pattern. And because if you take a look left, very clean price action over here. No consolidation, no crazy action, just straight up. All very clean price action, so we should have no problem coming down to this low here. So that's the first thing I notice is, okay, I'm more likely in a position to take sells, because I don't want to fight the trend and try to take buys against this. So when I notice that, okay, we are coming up to create this level of resistance right here. After it broke down below, it came back, didn't quite retest, but it's close enough. It's all, you know, it's all close enough. There's no exact number it has to retest, but as long as after it breaks down, pulls back, this is considered a retest. Now I'm looking for a sell. Right, so now is typically when I'll drop down the 15 minute And of course, it's going to make me go all the way back to that level. I apologize. Give me 1 second, right? So if you're on the charts, which I was, after I saw this candle right here close engulfing bearish against this level of resistance, this is typically where I take my sell. So I took a short entry at the open of the next candle. And keep in mind, I trade off of closed volume. If you're trading off of open volume in the candlestick, it becomes tough, and you got to make sure that you're not fighting the trend. You're not counter trending on open volume, because it becomes very risky, and you really don't have much of an edge at that point. And then, so, you know, I'm big on candlesticks, and I think that when you have candlestick form like this and you have a bearish engulfing, it should really respect this previous high. And if it doesn't, I don't like to trade anymore. So that's where I place my stop losses. I place the stop losses above the previous candle where it should really respect. So this is around a 14 pip stop loss. And then my take profit is strictly based off of levels, right? So if you take a look and you look at previous price action, this is where it bottomed out and failed before. So this is definitely an area where I'm going to have a take profit at. Now, I don't just blindly get out of all my position at once. I'll scale out. So once I notice that, okay, looking left, this is an area where we failed before, right in this area, and this is also an area where we failed today at 4 a.m. I'm going to take half off right here, and so that's 1.5 to 1, which is good. You take half off there, and then I'm going to let the rest ride as a runner. And the rest of my runner is going to be either a stop at break even, and I pull it back down at this point, or it's going to come down to this previous low that it formed yesterday. And that's exactly what it did. I took half off at 1.5 to 1, and I let the rest ride. And the rest ended up being around 5 to 1, a little over 5 to 1. So this was a really good example of a short. Now the thing is, if you miss this trade and you're not up at around 6 o'clock, well, I'll tell you how you could have taken this trade a little later. You also notice that, okay, it comes down, it's coming down to this level of rejection, and it's forming a level of support right above where it rejected before. At this point, I'm looking for sells, and I'm like, okay, since this closed bearish at this level of support, and the next candle closed, that closed bullish, and this next candle closed bearish, I'm looking for a continuation. Then, if it breaks this low here, I will take a short entry right here with a stop above the current candle's high, because if you notice, it came up, created an upper wick just to retest that area and started moving down, breaking this low. This should not come back up and break its own high. If it does, it's not ready to go down. So I put my stop above that current candle's high, and then my take profit would then be in two tranches, right? If you look left, this area was a level of support before. So my first take profit would be at 1.3 to 1, and my second take profit is down at the ultimate area, which is 2 to 1. All right, so that's not a bad trade either. That's if you miss this first trade. That's the second trade you could have taken, and also mentioning that that's a trade I could have stacked on if I wanted to stack a position. This would have been a good trade to take. So this is a good example of a short price action. You just don't fight the trend. The trend is your friend. So you notice that today it's moving down, and it's really it's failing yesterday's move right here, right? So it came up, couldn't create that high, and it rejected it and started moving down. After it crossed this level right here, 136,750-ish, I knew that we're all sells. So once I saw a pullback and a resistance being formed, that's when I look for a sell for that continuation, and you go with the trend, with the momentum. So that was one example. Let me hop on back up to the 30-minute. October 21st is going to be another example I noted that I wanted to show you guys. It's actually a couple days after. Okay, so right here. Now this is a really good example of what we call a wick fill. Now if you notice going into the day, you have this level, this solid level of resistance. See, if you look left on October 19th, That's where it formed that level of resistance. And again, this day, on the same day we traded, October 21st, is where it was topping out at right here, right here. So it was having a lot of trouble breaking it. Now, if you take a look, this was a trade I was willing to take, and I'll tell you why. New York opens around 8 o'clock. NYSE opens at 9:30, and that's when you have a couple rushes of volume coming in the market. Now, when I noticed that, okay, it's struggling, you know, around 4 o'clock, 8 o'clock, it's struggling to break it. Come 9:30, it has this really large bullish candle, breaks through, and pulls back. But if you keep in mind it's 9:30, there's a lot of volume in the market. When it created this large wick right here, I knew that when it closed, it should really fulfill, that's called a wick fill. You have a lot of range for it to go up and fill that wick. So that's where I would have taken an entry. Let me go back down on 15-minute. I apologize. Give me 1 second to scroll back. Okay, so right here. Right, you have that wick fill. It broke up and pulled back. So after this candle closes right back at this breakout point, that's where I take an entry because you have volume on your side. It's forming these higher lows. It's forming a nice uptrend, wedging right into this. After it broke out and pulled back, I consider that a retest on a lower time frame because I'm sure if you look at the 1 minute or the 5 minute, it closed up here, came back to retest this breakout point, and that's going to go, right? So this is where I would place my entry right at the open of this candle. My stop at the low, and that was about a 17 pip stop. And my take profit, you have to look left, right? And this right here, this area would be my first take profit. Then my second take profit would have been this area right over here, right? So that's where it failed. That was a couple of nice levels looking left. So when I take that, my first take profit's right here, and that's about 1.4 to 1. Now then I set my stop to break even, and then I let it ride. I let the runner either go to break even or continue up to this level. And that level is 3.2 to 1. So again, this was a really nice trade based off of price action and supply and demand zones. And this was also a good example of a wick fill. When you have a large wick, that leaves a big range for you to trade on, and it should really fulfill and close that wick. So that was another trade. Let me go over 2 more quick trades, hop on back to the 30-minute, and let's go to November 12th. All right, so right in here. So this is a good example. If you notice that, you know, it topped out up here and it's starting to move down, and this is the day I'm looking at. Once it broke below this consolidation point, I figured sells were all in. And I look left and I see that, okay, around midnight Eastern time, it had broken through, retested, and is now moving down. 2 things could happen really when New York session opens. It continues the London session trend, or it will reverse. When I got into the market this morning, I drew my levels and noticed that, you know, this was a nice level of resistance and this was a nice level of support. And come 6 o'clock, this is where I saw the price action. So this was a choppy range. So I told myself I'm either going to take a sell when it breaks below here, or take a buy if it closes above here, and do it and does that reversal, that New York session reversal. Now I hop on down the 15-minute, go back to November 12th. Cool. So looking at price action, I see that right here it closes below. That's at 6:45, or that might be a little later because that's when the candle opens. So maybe it's 6:50, near 7 o'clock. But what you notice is it closed with no wick on the bottom. And when it closes with no wick on the bottom, I don't take the trade. I wait, because that means that there's no range for it to move down, and it's a 50-50 chance it could easily move back up into this range and be a fake out. So I wait. At this point, you got to be okay with missing a trade. So my thesis is I'm waiting now for a retest of the breakout. It has to now come down, retest, then it'll go. So once I see it comes back to retest, forming this almost like a morning star, with this bearish engulfing candlestick, I'm all in. I'm like, that's a morning star, bearish engulfing candlestick on a 15-minute time frame. I'm all in, I'm short. And that's with the trend, not fighting the trend. So my stop would be above the high. That's about a 12, 13 pip stop. All right, and then my first take profit, looking left, would be this area right in here, because that's where it had bottomed out and rejected, you know, back on the 10th. So that's my first take profit. That's where I take half off, and that's 1.8 to 1 risk reward. So that's good. Now then my second take profit looking left, it's tough, right? Because you have this very clean price action looking left. So what I probably would have done was, after taking off this position, I probably would have saw that, all right, maybe in here is where we saw some hesitation. In here we saw some hesitation. So somewhere in this zone is probably where I would have taken some off, because in the 5-minute, that's where you saw some hesitation. These long bars, it's just very clean price action. So as you can see, it was coming down. I'm trailing my stop. So also at this point, I trail my stop, because there's really no area over here that's an obvious level to take profit besides over here. But that's a long way to go, and I don't want to get greedy, so I'm trailing my stop at this point. Every time it makes a lower high is where then I place my stop. Once it creates this lower high here, my stop's above here. Once it creates this lower high here, my stop's above here. And then eventually it came down to this zone that I mentioned over here looking left. And me not wanting to be greedy, that's where I take my full take profit. And that's about a 7, almost 8 to 1 risk reward win. So that's a really good example of how to trail your stops and how to let your runners run. All right, so that was a good example. And to keep in mind that I'm over here not fighting the trends, and I'm trading with the trend. So let's hop on back to the 30-minute, and we'll give you one more example on November 24th. And I think the more examples, the better. It'll really show you how to trade these. All right, cool. So (30-minute), draw my zones. As you can see, it's really consolidating in here. Consolidating in here, breaking, so up and down. So these are my two levels. So I'm like, all right, I'm either going to take sells below here or buys above here, because at this point it's moving up far. It's been moving up since it bottomed out over back in November 19th, and now it's moving sideways, and it's not really sure what it wants to do yet. So now I'm like, all right, it's deciding still. It's accumulating orders. Now we'll see what it wants to do. And after I noticed that this candlestick right here at 9:30 closed bullish right at the top of the zone, I gave it one more candlestick. And actually, let me go down the 15-minute, because you know you could have traded that off 30-minute, but there's a better price action on the 15-minute because it's easier to manage this trade, right? So once I noticed that it closed bullish at the top of this zone, you have this bearish candle, and you have this bullish candle right afterwards. It's really holding at the top of this zone. The 9:30 momentum is already in, so I think that we'll see some. It's going to be a safe buy if we can break this high here. And that's where I take my buy. As we break that high, I put my stop below the current candle's low, and my take profit looking left. There's a couple tranches here, so I take my horizontal ray. This would be a level here, this would be a level here, and this would be a level here. Those are the three levels I look at for take profit. Now going back to price action here, my first take profit would have been right here, and that's a 1.5 to 1 risk reward, because that's one of my first levels I told myself I would take profit. So at that point I took half off, set stop to break even, and I'm letting the rest run. And if you take a look, this is why I set stops to break even, because it failed to go any farther, came down, stopped me out, break even. But if you take a look, this is where my stop was. It would have ended up stopping me out, and this could have been a losing trade. That's why I take half off and set stop to break even. This is a good example of managing your trade. All right, so you know, that's my price action strategy. That's my technical analysis, supply and demand strategy. So, you know, I hope you learned something today. Trading off of zones, waiting for closed candlesticks, waiting for, you know, trading with the trends, managing your positions, taking half off, letting the rest run, setting stop to break even. There's a lot of stuff you could have taken away from this video. But if you have more questions on this and want me to go in more depth or cover another pair, let me know. I would be glad to help out, and safe trading.